We love Wednesdays here at Kitco News because I get to be reunited with Vince Lanci, Managing Director over at FMX Connect. Vince, so nice to see you again.
Thanks for having me, and I feel the same way.
All right, Vince, I want to start by getting your opinion on something this morning. Reuters technical analyst Wang Tao came out saying that spot gold's 12-year bull run has ended, citing that the depth of recent falls in the price of the precious metal could have violated the long-term uptrends that started in August of '99. What are your thoughts on his comments?
If he says it definitively, he's wrong. If he's saying it could be over, that would be a nice, safe thing to say. But when you look at the market, it's been damaged without a doubt. We do have a couple levels that we think are, absolute lines in the sand that the market has to hold for this market to resume an uptrend at a healthier pace going forward. The main number is centered around the 200-day moving average, and that number comes in at 1535 today, which also is, I think, the low from that previous washout. So that's our line in the sand. We would, as a speculator or a trader, be hesitant to buy below 1535. As a longer-term investor, we're still buyers under there.
ADP numbers also coming out this morning, Vince. Not great, but better than expected. Private sector jobs were up in September. Did it have any impact on gold?
The gold market rallied, but rallies seem to be short-lived right now. You can make several cases for the reason for gold's muted reaction. Gold rallies, it goes back to unchanged. It just does not seem that there's any follow-through to the upside. And there may not be any follow-through to the downside soon. So the headline, I guess, would be, ADP market news comes out and, gold says, so what? Pretty much it's trading in the unchanged area right now based on that.
All right, Vince, staying on the subject of so what, Italy's credit rating cut by Moody's for the first time in almost 2 decades. Does anyone care anymore?
Yeah, the question is, are we taking a pause in caring, or from a perspective of gold, or is gold broken as a metric for hedging European risk? 6 months ago, crisis news comes out of gold, comes out of Europe, and gold actually competes with the dollar, moving side by side in a rally. Since the top of the market, gold has cared less and less about European crisis news. So is it headline exhaustion, or is it the fact that gold has been sort of broken as a safe haven hedge for the European markets? I think it's the latter. Although I don't think it's justified, it does exist.
Vince, do you think that Angela Merkel is the only one holding the whole thing all together right now?
Yes. It seems like it's Germany versus the rest of Europe. No inflation. We don't want inflation. We are familiar with the historical problems of that. Meanwhile, everyone else is saying, a little inflation is not going to kill us. We need to rescue Greece. So I can't add much to that except to say, yes, Germany is kind of fighting a battle against every other country with regards to austerity and default and liquidity provision.
All right, moving away from politics and back to numbers, Vince. We've seen disinvestment in many markets, but is there any way to gauge when that cycle will be over?
Well, in all the markets, but focusing on gold, the issue for us is if you think there's a bubble, or you think there's something that's got too many hot speculators in it, such as the CME did, for example, when they raised margins 2 or 3 times on gold, and when they did that on silver beforehand, what you want to start looking at is you want to start looking at the open interest. Now, if the market is selling off and the open interest is declining, you're looking at a bull market. You're looking at technically a bull market where interest is waning. What we'd like to see before we start stepping in is we'd like to see the open interest start to flatline in a dropping move. That would tell us then that you no longer have longs getting out, you have longs getting out and new longs getting in, or you have shorts getting in. So then at that point, you're looking at a sort of bottoming process or a healing process if you're bullish.
Okay, Vince, to wrap it all up, final thoughts for investors this week.
Well, we've said this before, and we're going to say it again. Gold has rallied. Gold did rally side by side with the European crisis. You could call that a bubble if you like, but as a true store of value, we're buyers. We are buyers of gold in our personal accounts, and we continue to average down, believing that the cure for the cure that these governments are going to eventually do for the deflationary disease they have is going to cause inflation. So gold's denominated in dollars. The dollar will weaken eventually. So we're buying.
All right, words of the wise. Thank you, Vince Lanci.
You're too kind. Have a great week.
And thank you for watching. You can email me at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.